Hello everyone and welcome back to episode 2 of Speculator Challenge. Today we are going to be implementing some diversification, which is a very popular term in finance. You hear about don't always put your eggs in one basket. Today we're going to be implementing that because we have some free cash just sitting around, and I feel like it's going to be a good opportunity to probably buy $3,000 worth of this stock. So yeah, that'd be a good idea to go ahead and buy something else. I feel like it'd be a good idea. We have some FLA, which is a utility company, which is very nice. And we're gonna look for something that has decent growth prospects. Or we're going to eat up some ETFs, which will be nice to have. Nothing looks super duper high growth at the moment, which kind of sucks, but I feel like it's about time we start implementing into some nice good old banks or some ETFs. So you can press the E key and that really helps. Exchange trade funds. You can see like the outlook of the company and stuff. But like I like the fund investment strategy. It's a bit high risk, automotive, so it's typically has to do with the economy, whenever it's doing good. The ETF's typically doing good. Same with for everything else, but what I really like is I like the financial shares funds in this game. That's one of my most favorite. Another one I kind of like is the basic commodities because it includes your commodities, which is kind of cyclical, which is very high risk. But in this case, I'm just going to do the financial shares fund, which I really love in this game. I always buy it. I love it. So yeah, it's pretty good. You can see like the profile. They have a lot of, they don't have much cash, sadly, so they can't really buy much. They're almost at their book value, which is good. And they're AAA, which is good. These are less risk. 52 cents payout, not bad. So I'm going to go ahead and I'm going to buy in $3,000 worth of this company. Just because I feel like having a bit of diversification, especially when it comes to financial services, will be a good option when it comes to our investment strategy in this game. 65 shares, not bad. Get a nice little starting position there for $3,000. And now we're about at 50-50 right now, so that's good. We're all even, so that's good. What I typically do in the other games is I also go for I go for mostly just ETFs in the game because they're a bit more of a set and forget it strategy. That's what I like doing kind of in real life too. It's just whenever you buy ETFs, they're typically managed by, well, they are managed by someone else, so that just makes things really easy for everyone, where you can just let someone else manage your money and you don't have to manage it yourself and worry about individual stocks. Yeah, so I like this company. The only problem is we have to pay out an MER of 1% of our assets. So we're going to have to pay out 1% of our performance. So if the fund doesn't do super well, we're going to be in a bit of trouble. But we're going to do just fine, I believe. Yep, we're a bit unbalanced at the moment, but I feel like things will get better. And economic data states that they're still tightening, which is a bit odd because the prime rate's been, well, it's dropped quite a bit. So thankfully I bought $30,000 worth of bonds, long bonds, and I got a good deal on that. So I'm just hoping that they're doing just fine when it comes to everything. Yep, so I'm just gonna let time roll out, see how things do. I'm feeling like starting to edit my videos and stuff too. Like I'm starting to learn on how to do YouTube really well when it comes to this stuff. Like I'm learning how to do some video editing and everything. Like my videos at the moment are not edited, so makes them kind of not super duper high quality, but I'm going to be starting to work on my quality on my videos and stuff and start to edit and everything. So not super duper talented for a beginner, but yeah. Our portfolio is taking a bit of a beating. We've so far lost 27K. So let me look at the, can you look at, I don't know how you look at the, how you look at, not too sure on how you look at the exchange, like just a typical market in general. You can see my net worth chart has basically gone down, which kind of sucks. I'm just trying to look at our portfolio versus the market, which is a bit difficult to find. You can view the recent headlines and everything, but like I don't really like that. Don't really care about all this stuff that's happening. It's could help you a bit, but I feel like it's mostly useless. Yeah, I can't find that. I forgot where it is. Oh, here it is. My mistake. So there's a bit of a bull market, a bit of a pullback, correction in other cases. That looks like 10% drop in some cases. I'm not entirely sure. But yeah. Oh, I don't know why that went up so much. I think they might have did a reverse split. So that's when like basically they reduce the amount of shares that they have. They basically, like let's say they have 100, they reduce it to 50 in this case, for example. That's an example of like a reverse split. There's 50 shares instead of 100. So it makes the price go up in a ton. Doesn't change the dividend, doesn't change much of everything. It just changes the price. So it makes you look like you made a lot of money, and then I realize, damn, my net worth hasn't really changed much. Yep. So yeah, we're a bit under balance at the moment. Oh, damn, that's good. That's good. The freaking prime rate is high. So we're just basically going to do another half. So we're going to do an extra 15K into the good old long bond because 8% on our money, that is good. Freaking love that. So the ask is $83. We're just going to buy about half of that. So we're just going to, let's just buy 15. That would cost us a total of 12,000. I'm going to buy, let's just say we're going to buy 17. 14K, close enough to 20. Whatever, let's just do 18. 18 should be good. 15K, a bit over. So it's not entirely half, but I'm okay. I'm not going to complain. 8% of our money is amazing. And when the prime rate when they end up doing the complete opposite, they go into a nice good old ease-in. Then I'm going to go ahead and sell the bonds for a nice little capital gain. Or I can keep them for above average returns and put that return towards that. So we're looking at our annual cash flow. Cash, so like that's the worst right now. That's just coming from our 15K, which is pretty bad. But government bond interest, oh, that's kicking butt right now because thank you, Mr. Titan. And our annual dividend income, it's okay. So we're doing really, really well. We don't have any margin at the moment. So we're going for like a kind of a low risk tolerance. I really, really like the way we're running our portfolio at the moment. Sadly, FOA is not doing super duper well. Like I can look at my stock portfolio. So far, we are down a lot on FOA. So I could theoretically eat up more shares of like. Let's just check it. Wonder if they still pay a dividend because it'd be nice to buy a little bit more. $1.40 a share, and we own like 900 shares. It's not bad. I feel like it's a good opportunity to put 900. So we own about, how many shares do we own? 986 times $1.40. $1,300. That would not be bad. Okay, and we received $300. So I'm gonna add an extra $374. Now we're gonna put $1,700 back into the stock and basically dollar cost average, which I explained in the last episode. It is very, very handy technique to lower down your cost basis. But their average cost is $69, and the share price right now is really low, so we lost quite a bit of money, but we could lower that down from 69 Yeah, so our broker really doesn't like it when we're buying this back. But I believe that is a good buy. So it's an A grade, which is still pretty good. So I'm going to put about $1,700 in the stock. 1,700 divided by the good old ask of $34.57. We're going to buy 49 shares. I'm going to round that to 50. $10 commission, not bad. And the prime rate is still high, so I'm really happy with that. So I'm probably going to start making it a bit more towards 50-50. I feel like we are at 50-50. We're a bit more into cash, I believe. Yeah. So we could probably start doing more stocks, which can 50-50, but due to the great environment of high interest rates, I feel like it's much better to start buying bonds once I start receiving those dividends. So we increased our income, I believe, by $400, so that's not bad. We are making $5K a year, not bad. So that's not bad off of a good old 100K, 128K. And if you do 5,000 divided by 128, that's our percentage of our return in dividends. No capital gains distributed. That kind of sucks, but whatever. And 14 cents a share, not bad. Should say in our news how much we made off all of the financial shares fund. That'll be helpful. And it's Florida Light Power has went up a ton since we bought it at 34. So it should say that we made. Should say that. Yeah, so our average cost went from like $69 to $67. That's much better. So I feel like, yeah, so that's why it's nice to have the 50-50 technique whenever it comes to like your share buying. It's because if you see a great deal in the market, you can dollar cost average into the stock and basically lower your cost basis, and therefore, whenever it does have a comeback, you can get a good capital gain on top of that. So I'm doing pretty swellingly right now. Florida Lights is coming back, and Mr. Market is deciding to increase that. But like, yeah, the index done pretty trash recently. Honestly, it's crashed a ton from 8,000 to 4,000, which is pretty bad. But due to our Florida Lights, we're barely touched due to this. But if you look at companies like in a bit more volatile industries, i.e. biotech, in which in real life, biotech is typically a really risky industry because they lose a lot of money trying to find cures for diseases and stuff. Yes, let's just see the summary of, maybe this is picked like the most investment grade company of them all, A grade. And you can see like the price chart of this company, I believe. You can do, yeah, so it's been all over the place. And if you look at our companies that we buy, they are not really all over the place. Well, I think it's actually worse in this case. But yeah. So biotech is a bit more of a riskier industry, my bad. And utilities are typically more stable. Because everyone has to pay for their hydro. If you don't, you're in a bit of trouble. I think I've already said that, but it's all good. Yeah. So we're in a high rate environment. I'm going to have to start eating more bonds for that stuff. And it's time to wrap up the video. Thank you guys for watching episode 2. I hope that my quality has increased a ton due to me being new to YouTube and stuff. And I thank you guys for watching, and have a good one.